welcome to ET Markets Crypto TV presented by CoinSwitch Kuber. On the show today, we will talk about DeFi, that is decentralized finance. This is a primer and we want to get the basics to understand what is decentralized finance, what does it do, what does it facilitate, what are the risks that are associated with it. I'm Miloni Bhatt, and as always, we have with us an expert to help us decode another facet of the crypto universe. Ashish Anand is the CEO and co-founder of Bru Finance. He has 17 years of experience in varied fields of finance like debt syndication and commodity finance. In addition, Ashish has over 5 years of experience in the blockchain space. Ashish Anand, thanks very much for your time today.
Thanks, Miloni, and thanks, CryptoTV, for inviting me on the show. It's really a pleasure to speak about the DeFi space, which is a new and upcoming space. And I believe that in India, it will have a lot of potential and adoption as well going forward.
Ashish, before we get into that, can you tell us a little bit about yourself and your company?
Sure. Hi, I'm Ashish Anand. I'm a chartered accountant for last 17 years. And as Miloni, you mentioned earlier, I spent most of time in varied field of finance. In around 2013, I got introduced to Bitcoin, was on the spectacle side of how it will work out, pan out as a money, switched to the other side somewhere in around 2016. And since then, I have been running into the blockchain. I have been running my companies in the blockchain space. And frankly speaking, today, we are the only production stage fintech platform which is running exclusively on blockchain in India. So that's what we have been doing. And now using DeFi, we are adding a new layer of financial transactions on top of that at Bru Finance.
All right, let's get into DeFi then. So Ashish, tell us, what exactly is decentralized finance and how is it different from the current financial system that we have in place?
Okay, sure. So, though we have been hearing about DeFi from last 2 years almost, DeFi summer of 2020 was when this certainly all of a sudden bloomed the sector. But if you look, actually speaking deeply, DeFi and crypto are not two different entities. Our first creation of crypto was Bitcoin, which was a new money and which was decentralized. So what essentially it was the first application of decentralized finance in a sense. Because for the first time in the history of the mankind, we were able to create a currency without a centralized bank. At least in the modern financial history. So we have been able to do that without a centralized organization. And that's, in my opinion, the first application of decentralized finance. But if we talk about the decentralized finance in the way we understand today, it means we are talking about doing financial activity, whether it is lending, whether it is wealth-related activity, investment, for example, whether it is about earning interest on your deposits, on your assets, all those activities which was today, most of the time we depend upon centralized entities. For example, if I have some surplus cash, I go to a bank and deposit it and take, the bank gives me certain interest on that. If I want to take a loan against my gold, I go to a bank, hand over my gold, take loan against that. I want to buy a house property, I mortgage my house property and take loan from bank. This is what we do. We go to a centralized bank. Similarly, we want to invest, we go to a mutual fund, which is again a centralized entity. What a decentralized finance does, that all these activities which are performed by centralized entities, like banks or mutual fund, is coded into smart contracts. So without a central intervention of a platform or a party or a third party, the smart contracts take care of all the activities we want to perform. For example, if I have, say, for example, I have certain Bitcoins and those are lying with us and I want to earn, because that is as cash, I want to earn interest from that. So what we can do, that we can go to a platform like Aave, deposit our Bitcoin, and we will start earning interest over there. The difference is that Aave doesn't tell me that I will not accept you because you are from India and Aave is operating in London. The smart contract is coded in such a way that I have to just lock my, I have to connect my wallet to the smart contract of Aave. There is no centralized entity which is acting as a gatekeeper. That technology takes care of all the aspects. Similarly, if I have to take loan, for example, so I can again go to, say, for example, MakerDAO, and I have certain Bitcoin, which is my asset. I hand over my asset, which I don't want to sell at this point of time. I hand over my assets to MakerDAO, and MakerDAO says, perfect, Bitcoin is trading at 50,000 USD. I am going to give you 30,000 USD as a loan. And nobody is going to verify that. There is no credit officer who is sitting, who is going to ask me 50 questions on that. And what will happen the moment I lock it? Immediately, I will have some form of, say, for example, a stable coin like USDT coming to my wallet against my Bitcoin. So that is what the decentralized part is. There is no central entity as a gatekeeper.
Right. Right. You mentioned smart contracts. Now, Ashish, for our viewers, you will have to explain that, because this is essentially, a simplifying of concepts.
Sure. So let's, smart contract is a way of, in the blockchain world, I would say, we call algorithms as smart contracts. So what is smart about them? That if you say that X action happens, then Y action will happen automatically. So that's how they were named as smart contracts. But essentially, you can think of them as algorithms, for example. So an algorithm switch mostly if and then statements. So if money is deposited in the, if wallet gets transferred to the pool account of, say, for a particular platform, automatically the interest will start accruing on that. Yeah. And then the pool will, on the other side, someone is borrowing from that pool, people will borrow from that. So we should think of smart contracts as algorithms, nothing beyond. That is my submission for a non-technical person.
Let's get back to DeFi. Can you give us some use cases, Ashish?
So many of them. So for example, again, as I mentioned, so DeFi can have very, very verticals. And like in finance also, we have so many verticals: lending, payments, derivatives, trading. So all those are different parts of finance, in verticals of finance. So similarly in DeFi, we have all these verticals. Let's take the use case of which I mentioned earlier, of earning interest. Let's talk about bank. So today, if I need to create a bank, what I need to do, I need to go to RBI, take a license first of all. Then I can start accepting deposits from different people. And then I can lend that money to different people as well, because that is what the banking license allows me to do. In the DeFi world, what happens that without going to RBI, the same thing can be done by, there can be questions about whether it is good or bad, but without going to RBI, a smart contract pool can be created in which digital assets can be deposited. As of today, digital assets, not cash or fiat, can be deposited. If we want to deposit fiat, etc., we have to convert them into digital assets. Yeah. And so then what happens? For example, I have certain, say for example, I have 1 lakh rupee. I want to deposit that in a bank. Bank says, I will give you 3% savings rate of interest and 6% FD rate of interest. But if I deposit the same on a crypto protocol, today we will be able to get 12% rate of interest. And mind you, in India, still the interest rates are much higher. Let's talk about the Western world, where the interest rate has gone to abysmal 0 or perhaps negative also in many economies. So for them, getting interest rates like 6%, 8%, 12% make a lot of sense. So they can, if they have fiat, they can convert it to a cryptocurrency and start earning interest on that.
Is it complicated, Ashish? Does a user need to have a certain level of knowledge, a certain understanding of smart contracts? And, to me, it seems like it's not something that everyone can or even may want to engage with.
So let me give, before I talk about DeFi, today on blockchain protocol, I lend to farmers. And number of those farmers don't even have a smartphone. Some of them may not be even having a feature phone. We use blockchain technology to facilitate lending through centralized banks, not through the DeFi protocol as of today. And loan goes to them in their bank account. And we use blockchain in the entire process. So it's about how do we create a technology solution that is navigable by the users. So certainly there are a bit of complications, no doubt about that. But we believe that as we bring it to the users and as more and more easier UX UI comes into picture, it will be much easier to use as well.
Right. But Ashish, I was reading, and what I also found is that billions of dollars have been stolen from decentralized finance protocol. Now, this was, from according to a new research by Elliptic, which is a crypto risk management and solutions company. And the data that they put out is that as of November 2021, over 12 billion in losses have been suffered by DeFi users and investors. And they said it was largely due to the untested and immature nature of the technology. What are your thoughts on it?
There can be two views on that. One is, given that the blockchain is decentralized platform, are they really thefts? Or they were used in the fashion as they were coded. So that's one view which can be taken on this. But let's take the strictest of the view possible, which is because the intent of the developer was not something which the exploiters exploited. So it was really some sort of a theft. So the question happens that is, how do we translate that intent? And as we know that every solution has some sort of, even Zoom can crash at times, right? So certainly there have been exploits like this where the protocols lost money. That in the sense because the codes were not written properly, or there were certain vulnerabilities which were exploited. Please mind it that these vulnerabilities were not like unauthorized access to a system, because decentralized platform welcomes anyone. Anyone can come plug in. So they run the transactions in a fashion which benefited a few persons instead of the community as a whole. So certainly it has happened, and that is where the lot of smart contract audits have started nowadays. Okay. And these are, I would say, learning pains of the system than anything. Despite all these, in last 2 years, from $20 million to $200 billion of the growth in the TVL is proof that despite all these issues, DeFi is gaining trust of the people across the globe.
Right. Ashish, if you can tell us, is it true that almost all DeFi transactions today, or majority of them, take place on the Ethereum blockchain?
That's correct, because DeFi actually was built on Ethereum. Rather, anything in the world has been, in the crypto world, has been built on Ethereum. And then slowly, some other chains also came up, like Solana today is one of the very upcoming chains, which is attracting a lot of DeFi protocols. Binance, like last year, was one of the alternatives which came up, and like Pancake Swap, etc., came up as challenges to Uniswap or SushiSwap, which run on Ethereum. So that's true, but it is changing. Right. And the change is being driven by the high gas fee on the Ethereum per transaction.
Yeah, so if you could, because of the high gas fee, which is the high transaction fee, on Ethereum, one of the reasons why DeFi or alternative financial structures are kind of taken up is, one of the promises was that your transaction costs will be very, very low. But if your gas fees are increasing, then that does not give people, any reason to then shift out of a traditional setup and move into DeFi. Do you think that could be one of the reasons, for people to not adopt it?
I agree with you 100%. I myself was a big votary of when we transfer money, supposedly, 1 year back, if you transferred, say, for example, a few lakhs rupees from one corner of the world to another, I'm talking about the middle class levels of lakhs of rupee. It can be crores of rupee. Also, the transaction fee used to be a few rupee, 5 rupee, 2.5 rupee on Ethereum blockchain. Even for crores of rupee, it used to be almost same. It did not used to change. Today that has changed, especially on the Ethereum blockchain. But Ethereum is working towards going to a next stage where these problems are expected to be resolved maybe in a few months or around 1 year's time or so. And on the secondary part, if you look at our own India homegrown Matic, which is the secondary layer on top of Ethereum, again, the fee is again minuscule, a very, very small decimals of dollars, a few rupee again. And that is what we believe, that if one blockchain, layer one solutions, as we call them, the core infrastructure layers, if they become bloated with high fee, the layer two solutions like Matic will come and will take care of that particular problem. So you require security where the L1 high fee comes, but you also require, as you rightly pointed out, small transaction fee for the people to adopt this sort of mechanism. And that's where L2 and other L1 challenging structures will come. So market will take care of this.
Right. Also, there is a lot of volatility in cryptocurrency. The understanding and the adoption of it, while it is growing, it is still limited. So this volatility, don't you think that'll keep people from trusting in DeFi?
I agree with you. And that's why, as I mentioned, the boom in the DeFi space happened once stable coin became very popular. So the stable coins, because they are pegged to dollars, the value doesn't fluctuate. Okay. So that is where now most of the transactions in the DeFi space are happening through USDT or USDC, that sort of, or DAI, which is again a pegged currency to, although it is a decentralized currency, but it is pegged to dollar. So that is what is happening for this purpose. And also we believe that going forward, DeFi will be moving only from, and that is where Bru Finance is doing work, only from digital assets to real world assets. And that will bring a new paradigm where there will not be any sort of volatility, which we are not used to.
India is mulling on regulating crypto. What is the expected impact of it on DeFi?
On the DeFi space, if the regulation comes in, depending upon what sort of regulation comes in, and whether we actually bring regulations which are in line with how the industry has evolved, or are we just trying to fit the old regulations on the new stuff, new innovations? Depending upon that, impact will be. So it is possible that some of the lending related activities, deposit, like I'm sure many people must have seen advertisement about Bitcoin FD on the TV or on the paper. I believe that may be regulated per se as per the existing things, because in India, our regulators have always been worried about getting deposits from the public. So there will be certain impact, but I believe that impact will be very good for industry, as it will allow people to do activities which are permitted. Today, there is always a chance that if I do something and someday one of the regulators wakes up and submits down, that will be a huge loss for anyone. And it is not unheard of. If you remember, 2 to 3 years back, one of the crypto exchanges promoted was sent to jail for installing a crypto ATM in Bangalore. So I believe that regulation will be a very good step to welcome step to come in.
Right. You've spoken about the enormous potential of DeFi, but do you feel, give us your thoughts on that the lack of accountability is a threat? For instance, say if there is a tech failure, how can you pin accountability when it comes to DeFi?
Again, it is like how we have to also look at the underpinning of the crypto revolution. Today, what is happening? DeFi protocols are not being run by one CEO, one board of directors, one company. Today, most of the DeFi runs in the form of, even if they are not called decentralized autonomous organizations, DAO, they are still run in the form of DAO by the communities, etc. And what we have seen that communities are very much, wherever even the hacks, etc. have happened, communities have come forward and tried to compensate those people who have lost. So we particularly believe, because there is not a central entity which is accountable here, and the community as a whole is accountable, the accountability will be much more. I believe that it will be much more especially for the consumers. We would see, because every consumer is part of the community. It is unlike, so for example, today, if I'm a depositor of State Bank of India and I'm not a shareholder, I don't have any influence on the SBI's policies, right? But a community member on a DAO, who is our consumer, is also holding certain tokens and has a vote, has a say into how the organization will be running. So I believe, given the decentralized nature, consumer will be at a forefront going forward. It will take some time to evolve.
Ashish, I have a linked question to the one on regulating crypto that the government is hoping to do. Is the government is also wanting to come out with its own central bank-backed digital currency. What will be the impact of that on DeFi?
It will be a good thing to happen. Why? Today, if we want to do anything in the crypto space, the friction between fiat to crypto conversion is very bad, very high. So, for example, sometimes you end up paying even 5 to 10% premium just for the conversion purpose. Yeah. So I believe that if regulations are framed properly, where we see a space where the regulators see that DeFi has a space to work into, DeFi has a role to play into the financial sector, and if regulations are framed according to that, there can be a huge role that CBDC and DeFi can come together. The crypto and the real world can be plugged in together, and that will work a lot. In addition to that, CBDC can play a big role in the remittance economy. Okay. So because you see today, I have some workforce outside of India as well. And every month I have to pay 5% extra on top of the payroll bill just for making the transfer, because I am transferring in fiat. If I transfer in USDT, I will not have to pay. Almost marginal fee I will have to pay. But we see that CBDCs can create a new sort of infrastructure where CBDCs of different countries can be plugged in together and can create some sort of a Swift challenger or a parallel Swift, wherein the money can be transferred at the click of a button without having the entire need of correspondence bank and confirming bank. And the transaction cost in that can be brought down very significantly. So that is one part which I see that CBDC can bring really big changes into this space. Okay.
There is one of the fears, which is always brought forth with DeFi, that it can be used to launder money and, which will hurt and harm people. Apparently, because DeFi has a strong anonymity. How can we address this?
I would say that so last year, not last year, this year, 2021, only in 6 months, first 6 months of the year, banks were penalized $1 billion for lapses on money laundering, etc., etc. And what we believe that every year, trillions of dollars are laundered through the banking system, and they still don't get affected at all. What we believe that DeFi can actually change this paradigm. While we talk about anonymity of the blockchain transactions, the part is that blockchain transactions are much less anonymous than cash is, because each and every transaction which is happening on blockchain is leaving a digital footprint somewhere. You can go on Ethereum chain and you can see that which wallet is transacting to which wallet anytime. And you can see the entire history as well. Not only you, anybody from the public can do that. So there are tools which have been created. And then there are tools which make it very much possible to connect a wallet to a particular identity as well. So I believe that given the pseudo-anonymous nature of this, actually DeFi is doing two things. One, it is honoring the privacy of the people, which we have lost. Actually, that sense of privacy we have lost in our quest towards regulating the money. So it is honoring the privacy, but at the same time, if there are problematic transactions, it is able to track them as well. So in my opinion, it is much better than cash in terms of actually speaking. When we talk about money laundering, etc., it is very difficult to do that using Bitcoin or other decentralized finance protocols.
Right. This is among my last questions, Ashish. With all that we've spoken of, and with this air of regulations here on crypto in India, do you think DeFi should be regulated?
Regulated with regulations which take care of the unique nature of decentralized finance.
And given all of the concerns that is surrounding crypto, what do you see as the future of DeFi in India?
I certainly see that. Look at our, despite all the efforts of financial inclusion, so much of fintech and BFC boom in India, today the MSME lending gap in India is $400 billion per annum. How do we bridge that? We have this huge pool of capital available today, which can be using crypto channels, can be brought to countries like India, any emerging market, where the yields are quite high. And there is a yield hungry capital, which is sitting across in different parts of the world. It is allowing, actually, crypto will allow people like you and me in different parts of the world to be part of the financial revolution, where the needs of yield earning and loan requirements or capital requirements are met. So certainly a huge benefit will come if India adopts DeFi properly.
Ashish, thanks so very much for explaining DeFi to us, the alternate financial system which replaces traditional intermediaries with software that runs on blockchains. Thank you very much for your time.